Good morning, everybody. It's 10:30, so we're going to get this webinar kicked off. I am Terry Benez, and thank you all for joining us today. It's so good to have you all here, and it's even better, and it's my pleasure to introduce Leigh Houghland from Chesapeake Bank and Dustin DeVore from Kaufman and Canoles. So I can tell you that we have the experts with us in the house today to talk about PPP2. So we're going to have a webinar, and if there's any questions, please chat them to us using the chat box. And then Courtney, at the end of the presentation, will be able to ask your questions to Dustin and Leigh. So we are leaving time at the end of the webinar for questions, so please put them in the chat boxes. Again, welcome everybody. We're so happy to have you here. And Dustin and Leigh, thank you for providing this valuable webinar to our members. And Dustin, I'm going to hand it over to you.
Thanks, Terry. Good morning, everybody. Again, my name is Dustin DeVore with the law firm of Kaufman and Canoles. Leigh Houghland, my co-presenter from Chesapeake Bank. Leigh and I have worked together for many, many years on a number of lending issues to area businesses. So Leigh is one of the most experienced lenders in Williamsburg. So we're fortunate to have him here as well. Let's go to the next slide. We're going to talk a little bit today about PPP basics, kind of where we've been. We're going to introduce the second draw of the PPP loans, which is the main reason we're here, provide a tentative timeline that has been put forward by SBA, and review the SBA interim final rules for the second draw loans. What's the bottom line of all this? Well, the bottom line is SBA guidance remains fluid. So you probably saw with the first tranche of loans, this is a moving target. So we can expect changes almost on a daily basis. As many of you recall this past summer with the initial PPP loans, between SBA and the Treasury, new guidelines were coming out almost every single day. New frequently asked questions came out. We eagerly anticipated those because those were very helpful. Just to get on my soapbox quickly, I can speak from experience this summer that the PPP loan program, although it certainly has its flaws, it really, in my opinion, was one of the best government programs that I've seen in my 20 years of practice in law. I know our firm would have had hundreds of businesses go out of business that are clients of ours without the PPP program. And it was a bipartisan effort, primarily through Senator Rubio of Florida and Senator Shaheen of New Hampshire. And I think they made a smart decision on it, which was they erred to the side of getting the money out quickly. They knew that there would be fraud. They knew that there would be problems. However, they knew that we were in the middle of this pandemic. We were losing millions of jobs. And so they said, you know what, we're just going to go ahead and take the hit on that in order to get money out quickly. And I frankly think that was the right decision. You know, I could be proved wrong, certainly, but as I can tell you, it's a fact that I know our firm, and I'm sure Leigh's bank, has many, many businesses we work with that would have gone under without PPP. So let's go ahead to the next slide.
All right, so I think I'll take over here, Dustin, for a few minutes.
Great.
Again, I want to thank Terry Benez and her staff for providing this forum this morning to discuss this latest round of P3 loans with members. And also really a lot of thanks to the council's focus on important communications during the pandemic. I think you guys have done a great job of letting everybody know about all the programs, and I think that's really important. I also want to thank Dustin DeVore for partnering today with me on this presentation. He authored the PowerPoint, although looking at our pictures, I think he elongated my head. I don't know if it's that tall and skinny, but maybe it is. Anyway, that was a little shocking. But those of you who know Dustin and Kaufman and Canoles know that they're huge advocates for small business. So Dustin, thanks for all that you do. So how did we get here? So finally, after a lot of teeth gnashing and partisan squabbling, and Congress passed some much needed relief for businesses on December 21st. President Trump signed that on December 28th. And now the SBA is ready to roll out the program to businesses. The rollout is staggered. So one of the criticisms of the program originally was that it did not help minority businesses as much as it should. So they have offered it first to community, to community development financial institutions whose focus is on underserved communities and minorities. So they started, they started taking applications. Excuse me, let me get a drink of water. I must have swallowed a bug. So they started taking applications on Monday for first draw users, and then on Wednesday for second draw users. And all other banks will begin processing this second round of PPP loans a few days later is their definition. So we're hoping Wednesday, but probably be towards the weekend. And then obviously we have until March 31st to apply, or until the $285 billion is exhausted, which is the amount that they set aside for this next round. Next slide, please. All right, some of the basics, a quick refresher. So the P3 loan is forgivable if at least 60% of it is used to cover payroll. So of the amount of loan that you get, if you can document that 60% was used during your covered period for payroll, then you're good. It is fully backed by the SBA, which means that when you apply for the loan, you don't have to provide collateral or personal guarantees for your business. As far as the eligibility, if you are a first draw P3 borrower, that means you didn't draw last year. Basically, there's an economic uncertainty test where you just have to attestate that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. If you previously applied and received a PPP loan, for the second draw, you're going to need to show a revenue drop during the pandemic, and Dustin's going to get into that shortly. Businesses are generally eligible to apply for 2.5 times their average monthly payroll, and you can use 2019 or you can use 2020 for this calculation. We assume that most businesses will use 2019 as payrolls were likely higher pre-pandemic than they were this past year. And there are some exceptions to 2.5 times monthly payroll calculation, which I will cover shortly. And I think it's back to you, Dustin.
Thanks, Leigh. So the second draw PPP loans, what we know so far and what to expect. One thing I really want to emphasize here with this second draw is, in particular, for those of you who are on the call who are either in the restaurant business or the hospitality business. There, as Leigh said, there's the 2.5 times payroll factor. Well, as you'll see shortly, if you're in the hospitality business, hotels, restaurants, lodges, you can actually do a much higher percentage than that, which Leigh will talk about. So again, if you are in the restaurant or hotel business, really key for you to look into this. Next slide. So per the legislative text, SBA is, as Leigh said, is prioritizing CDFIs, minority depository institutions and other lenders first, promotes access to capital to communities that have previously not had access to capital. Go to the next slide. Okay, there are narrower requirements for these this second round or second bite at the apple, as we call it. Initially, there was an unlikely. Initially, in the first round of PPP, you had to make a certification that economic uncertainty gave you the necessity for the loan. This time you have to meet a 25% loss of revenue test. it's interesting, as Congress went through the machinations of debating this, initially, I think it was a 50 or 60% test, and it got better for borrowers. So right now it's a 25% loss of revenue test. So what the entity has to do is compare its gross receipts based on 2020 quarterly revenue against 2019 first, second, and third quarters. So you have to demonstrate that gross receipts from at least one quarter in 2020 were reduced by 25% compared to the same in 2019. So that is a lot of businesses. Again, initially it was going to be 50%, and it was going to have to be for the whole year. So this has been liberalized greatly. So again, let's go through that again, because I think it's important. You take your gross revenues or gross receipts from 2020, okay, against 2019. And if you can show in 2020, you had at least one quarter was reduced by 25% or more, then you qualify. So pretty broad. And it's limited to entities with no more than 300 employees. I know we spent a lot of time, Leigh spent a lot of time looking at, well, what does 300 employees mean? Because, you have companies with affiliates and companies with subsidiaries, and we don't have time to get into all that today, but it gets very complicated if you have that. So we'll go to the next slide. Okay, going on. So SBA's recently issued a rule that expands the test. A borrower that was in operation for all quarters in 2019 meets the test. As we said, if the borrower experiences at least 25% reduction, there's an assumption that if annual filings show a 25% reduction, then at least one quarter would have had at least a 25% reduction, obviously. So again, pretty broad. A lot of the initial buzz about the second round was going to be, well, I'm not going to qualify because you have to have had your business basically tank or go out of business. And that's really not the case, as you can see from this. So with that, I will turn it back over to Leigh.
Thanks, Dustin. And one thing to point out is that gross revenues that you calculate to determine if you meet the revenue decline threshold, that does not include any P3 money you might have gotten last year, or if you receive an economic injury disaster grant, that's not considered in that as well. So you don't have to include those. So again, it's, as Dustin said, it's pretty liberal.
That's a great point, Leigh.
Next slide, please. So this chart highlights the eligible P3 loan amounts by the type of business. For most businesses, it'll be just like it was for the last year's P3 loans. It'll be 2.5 times average monthly payroll. And again, you can use either 2019 payrolls or you can use 2020 for this calculation. And as Dustin pointed out, for restaurants, lodging, and food services, if your NAICS code starts with a 72, then, and these are arguably the hardest hit businesses from the pandemic, they can apply for 3.5 times their average monthly payroll.
Hey Leigh, could you, for those on the call who are not familiar, like you and I are, could you tell them what the NAICS code, what that means?
Well, probably you better tell them, since you might have a better definition than I do.
Sure. The NAICS codes are codes that the federal government uses to classify industries. So it's pretty easy to figure it out. So if you don't know what your NAICS code is, you can go online and figure it out pretty quickly, whether or not you qualify for that 3.5 or not. Thanks, Leigh.
And it'll also be on your tax return as well. In the first page of your tax return, I believe they have it. So again, restaurant, lodging, and food service, 3.5 times average monthly payroll. Also included in this chart are the calculations for seasonal businesses and newly formed entities. And I won't go into those, but there are allowances for as well. Slide, please. All right. So the most recent legislation has expanded the simplest form for applying for forgiveness. Previously, it was for loans 50,000 or under. They had a very simple forgiveness application. With this new legislation, that's been expanded to $150,000 or less. And according to the SBA, that will cover 85% of all P3 borrowers will fall into that category. So that's pretty important. When you receive your P3 funds, you need to plan whether you will document your use of funds for an 8-week period or 24 weeks. For those, this is the same as for those who had a first round P3 loan. This is the same option you had for those funds. I will say that many of my first round borrowers have been opting to spend the funds over the 24-week period, as they find that that documentation is a lot less onerous than if they show that they spent the money over 8 weeks. Primarily because if you spend it over 24 weeks, because basically you have 10 weeks of payroll that you're spending over 24 weeks, you can demonstrate that you exhausted the PPP funds through payroll only and didn't rely on the other eligible expenses. So again, much easier to document that at the time of forgiveness. Again, to receive forgiveness, you're required to spend at least 60% on payroll during your selected covered period. And then the remaining 40%, which are eligible expenses, are payments of interest on mortgage obligations related to your business, rent payments or leases, utility payments, and most recently, a new change is costs related to operating your business during a COVID environment. A caveat to the above eligibility is that these obligations must have been in place prior to the onset of the pandemic. For example, if your business signed a new lease for space during COVID, those payments would not be eligible since those started during the pandemic. Just to wrap up, I would recommend that each of you reach out to your bank to find out how they'll be processing your application. Again, the general banking population is going to be released to accept applications here, we think, this week, although we don't know for sure. We're hoping it'll be this week. But as far as the process, all the banks, if it's anything like the first round of P3 loans, all the banks will be handling them a little bit differently. If possible, get your application and supporting documents into your financial institution as soon as you can. There's about $285 billion that's available for this program. We don't know how long it's going to last. As you know, this latest round of stimulus has been a long time coming. Businesses have been begging for it, and just finally that Congress got their act together, but I think there's a lot of pent-up demand. Then I will just say, from Chesapeake Bank's side, in an effort to be fair, we're going to be focusing on our existing clients to start with, and then as capacity becomes available, we're going to entertain non-bank clients for the P3 processing. But again, we think it's most fair to focus on those folks that already bank with us. The banks have been instructed that we're going to be using a different portal for application than we did during the first round of P3 loans. There was a system called eTran you probably read about in the news, but the system crashed a lot. And I can tell that those within our bank that were unlucky enough to have to enter applications, they would be 90% through an application, the system would crash and they'd have to start all over again. So we had employees getting up at 2 a.m. in the morning to enter applications because that's the only time the system was stable. And also in the first round, the banks received almost instantaneous approval or a loan number. As soon as we received a loan number, we were able to create loan documents and disperse monies. We've been advised that that process is going to take a couple of days this time. The SBA is hoping they can eliminate some of the fraudulent applications that happened in the first round or screen out ineligible borrowers. So again, the date from when your bank enters your application into the SBA system to when they receive approval and the loan number is going to be a couple of days. Dustin and I want to thank you all for your time and attention this morning and hope that we can reunite in person sooner rather than later. I know that we just scratched the surface, but hopefully you found this helpful, and we'll open it up for questions.
Hey, Leigh, before we get into questions, I made a quick list here of the questions that we were getting from our clients. One was, as I said, on number of employees. Second was on the certification. Another was on the covered period. We got a lot of questions about the covered period. And I agree, most of our clients use the 24 weeks. Another question that came up a lot was, will I be audited? And as you know, the SBA came out and said they were going to audit all loans over 2 million, and loans below 2 million would be subject to random audit. I've not heard anything yet in this round about who will or will not be audited. Have you?
I have not. I would assume that it's going to be pretty similar to what we experienced on the first round, Dustin.
Yeah. Okay. Thank you. What questions what were some of the main questions you were getting from your customers, Leigh? Mainly on how to fill out the application, or?
Yeah, so the big one that I received obviously was eligibility. You know, what revenue reduction do I have to show? And again, it's the quarter over quarter. So you can pick one quarter in 2020 and compare it to that same quarter in 2019. Again, has to be a 25% reduction in gross revenues, exclusive of P3 funds that you might have gotten or idle grants. So that was a big one. The other question was, you know, do I have to have my loan forgiven, my first P3 loan forgiven before I can apply for the next one? And their answer is you do not. You have actually 10 months from the end of your covered period, from your first P3 loan to apply for forgiveness. So they give you a long runway, but we're encouraging folks to apply. And obviously, if you're in that 150,000, between $50,000 and $150,000 P3 loan amount, it probably makes sense for you to wait until that new simplified forgiveness application comes out, which hasn't come out yet, but we think it'll hit the streets here soon. Those were two of the big ones.
Great.
Thank you, Dustin and Leigh. Right now, we do not have any questions in our chat box, so we're going to open it up. If there's anybody on the line who would like to ask a question.
Terry, I do have questions.
Oh, you do? Okay, great,
Yeah,
Courtney.
I have some questions. All right, so one of them is from Eric Christensen. Should we use the same payroll numbers from the first loan for the second loan?
Yeah, so if you think your payroll in 2019, which is what you'd use for your first loan, is higher than your payroll in 2020, then I would certainly use those same figures. And if you've already applied before, your financial institution already has those documents, so you don't have to provide those again. Matter of fact, if you use 2019 again, your loan amount will be the same. So it'll be pretty easy.
Okay, thank you. And then this next question is from Randy Casey Rutland. Does the new simplified SBA forgiveness application apply to all PPP loans or just the second rollout?
My understanding is that we are going to see a new application for loans 150,000 or less, which would be similar to the simplified application that we currently have for the first round that was for 50,000 or less. Over 150, I don't know the answer yet. I think it's going to be the same applications that we have now, but I don't know that for sure.
I think it might have to change, Leigh, because of the 25% rule.
True.
But I don't know either.
Well, that makes sense, Dustin.
And as we said, as Leigh and I said at the beginning, you know, this is a moving target, so it could change by the day.
Okay. Moving on, this person has asked to remain anonymous, but there's basically a three-part question. So number one, please confirm what the official beginning date of the pandemic was.
That's a good one.
Yeah, I have no idea.
I know that when they, one of the things I was talking about was the eligible expenses. So these were like leases and rents you paid and loans you took out, all had to be taken out before, I believe it was February 20th or 21st of 2020. So that might be what they consider the start of the pandemic, but I'm just.
Yeah, that's a great point, Lee. I think you might be right. That would be my guess. Yeah, I think that's right.
Okay, and then I guess part two of the question is, are there any stipulations for approval of this PPP to forgiveness or notification of forgiveness of PPP round one?
Could you read that again? I'm not sure
Sure. Are there any stipulations for approval of this PPP forgiveness or notification of PPP forgiveness for round one? So I guess what they're asking is there any, like, I guess, will the same forgiveness be for both round one and round two?
Oh, I see. Yes, yes. You will be able to apply for forgiveness just like you did in round one and have your loan forgiven. And if the loan is not forgiven, then it becomes the low interest loan.
Okay. And then the last part, please confirm the new quarterly comparison requirement is restricted to the strict definition of Q1, 2, and 3 versus a 90-day period. Is that essentially the same thing, or are like the business quarters?
Yeah, I don't. If I understand the question correctly, Lee, feel free to jump in. You can't pick and choose the 90 days. I don't think.
Okay.
You have to use the way I understand it, and more guidance will come out. But I believe you have to use the calendar quarter. I don't know. You think that's right, Lee?
Yeah, I actually had a customer who was asking me about that. And so I dove in a little bit that, and that's my understanding. It is a calendar quarters, not 90 days that you choose.
Yeah.
All right, moving on to the next question. This is from Ken Kelly. And the question is, my payroll from a hospitality perspective is highly seasonal and ramps up in the springtime. Is my average payroll commuted over the entire year, a 24-week period, or some other? If I apply now and receive a loan during the off season, it seems unlikely I'll be able to spend enough during the covered period to offset the loan amount.
I know there were some very specific rules in round one for seasonal employers. And I don't recall what those were at this time. They were very complicated. But there are rules out there that you can find in regards to round one that deal with just that issue. I just don't recall the answer. Do you, Lee?
I don't. I mean, I think part of the question was, how does he calculate his payroll? And there are some caveats for calculating your eligible loan amount via payroll for seasonal businesses. So he probably should look into that. And also, obviously, he would choose the 24-week period for spending his payroll, although I realize that doesn't get him into his busy season.
I think the other thing people need to remember is don't let perfect be the enemy of the good. And I had a number of discussions with clients that went exactly like this, where they said, oh man, I'm not going to be able to use it all, and this, that, the other. And I said, okay, well, what are you going to have? You know, let's say they got a $250,000 PPP loan. And I said, okay, well, what do you think you'll have left? They said, oh, about $30,000. And my answer was, so what? You have a $30,000 super low interest loan, basically almost 0% loan over 5 years. You know, pay it off over the 5 years. It's still better terms than you're going to get, you know, than Lee would give you on a regular loan. So I think, again, don't let the perfect be the enemy of good. And remember, just because the loan is not fully forgiven, you have lots of time to pay back that other portion over time. It's a pretty nice low interest loan.
Okay, thank you. This is from Tony Peruso. I'm sorry if I butchered your last name, but are independent contractors still eligible if they meet the financial tests?
I haven't seen anything that says they are not. So as of right now, I would say yes. Leigh, you seen anything?
Yeah, I would agree.
Okay. And then for those who hopped on the call a little bit late, Leigh, I know you went over this a little bit early, but Harold McDonald would like to know when the applications will be available, and will it be available through our banks? So if you could just retouch on that.
So the right now the minority financial institutions are starting the process. They started taking applications Monday for first time P3 borrowers and tomorrow for second time. And then the SBA says within a few days, they're going to open it up to the rest of the lenders. So we think that's later this week. We don't know for sure.
Okay. Thank you. And then our next one is from Kimberly Watson. We were told the bank or SBA would invite to apply. Is this correct, or will it be available to apply on the website like the first round?
No, just like the first round. There's no way the bank can know who to invite because they don't know who's lost more than 25, had the 25% quarter revenue drop. So yeah, if you think you're at or near the 25% test in quarterly revenue hit, then go ahead and apply.
Right. Now, I will say that we obviously been communicating with our existing borrowers as this processes unfold. Sorry, another bug. But so we're going to be sending out a link for them to start the process. And obviously those that have received the link or the updated emails, some have already opted out saying, I don't meet the revenue threshold. But so we are being proactive with existing borrowers. But obviously, for those that are at another bank, I would encourage you to reach out now and just find out what the process is and how you get on their list to start it.
Okay. This is from David Shoemaker. I'm sorry again if I butcher your last name. When you say that things will roll out in phases, how are we to prepare if we aren't considered in the first two parts of this phase plan? How can we move forward with confidence that we will have a chance to acquire funds?
Well, $285 billion is a lot of money. And from the first round of PPP, I think they ended up with about somewhere between 120 and 136 billion dollars was left that wasn't used. So I think there's a good chance. Also, because of the limitation in this round, most businesses are hurting. There's a lot of businesses that have done really well during the pandemic, though. Because of the limited number of businesses in that 25% test, I'm feeling good that there'll be money out there for our small businesses. As far as knowing whether or not and when you should apply and things like that, as Leigh said, you need to be in touch with your banker. And if you did get a first round PPP loan and you're interested in a second one and you haven't been hearing from your banker, maybe you need to find a new banker. And Leigh would be happy to take your call.
Okay, thank you. The next one is from Kevin Danker. If someone did not get a loan the first time, will it limit them this round?
I haven't seen anything that says that. I don't think that, no, I don't think there's any requirement at all that you had a first round PPP.
Yeah, if you didn't get the loan first time, then basically you just have to attest to the economic uncertainty. So the borrower is much lower to get that first round or the first draw of P3 funds than it is for these people that have to show the 25% decline. So it's a little bit easier.
Okay. Scott Hale asked, please confirm the 25% drop has to be from Q1 to Q3 from 2019 to 2020, not Q4?
No, you can choose any quarter you want, but it has to be a calendar quarter from those three.
Okay.
And the comparison is quarter to quarter. So if you choose the second quarter of 20, you need to compare it to your second quarter of 19.
Yeah, great point, Lee. You can't go quarter 3 19 to quarter 1 20. That, yeah.
Okay, thank you. Okay, from Jen Haynes, sorry. What is the covered period for the second round? Is it going to be 8 or 24 weeks like the first loan?
Yeah, so it's 8 or 24 weeks, so exactly the same. If you just, again, most borrowers are, for the forgiveness process, are choosing 24 weeks. It's just easy to demonstrate that it all went to payroll.
Okay. All right, and then this says when you're looking at the 25% loss, is that based on cash or accrual reporting?
I would think, however, you do your tax return, but I'm not sure. Lee, you know?
Well, I would say the lender is going to require, the bank is going to require you to demonstrate this 25% loss through, most likely through a quarterly P&L. So however you create that, I mean, if you're just doing cash, and that's typically how you do your P&L, and that's what you show your lender, I think that would suffice. Or if you do a accrual, but I would say whatever you normally do is what you would use to demonstrate to your lender.
If you're an S corporation, you have to use accrual, I believe, right, Lee? Or so for the S corporations out there, or is it cash? I may be getting that confused. But anyway, I would check with your accountant.
Good answer, Dustin.
Yeah, exactly.
All right, we have two more questions for you guys today. As far as rent, we are incorporated and pay rent to an LLC with the same owners as the incorporated. Are we allowed to use our rent payments to the LLC?
Yes.
Sure.
Right. And then the last question is, can you comment on the interaction between PPP and the employee retention tax credit? I would like to apply for the ERTC. Can I use the ERTC even if I have used PPP funds for payroll expenses? I believe I read under PPP number 1 that I could not originally, but the new law revised this.
I'd really advise you to check with your accountant on that. That's
yeah, I do know that
that's not something I've dealt with.
I do know in the first round you couldn't do both. So, but I cannot speak to if that has changed with this new legislation. I have not read about that.
Yeah, I'm pretty sure you couldn't in the first round, but yeah, I don't. And even if as of today you can't, I advise you keep looking because it could change.
Okay.
Well, thanks everybody. We appreciate it. Terry, thanks for letting us give our 2 cents. It's always a joy to be with you.
No, we appreciate you all stepping up to the plate and giving us the latest information. So thank you to everybody who attended. A big, huge thank you to Leigh and Dustin. This will be recorded if you want to share it with your friends or you want to sign back on. So again, thank you and everybody have a great day.
Thanks, everybody.